Felix here, and we appear to be live from a rather new location. I hope you can hear and see me clearly. We are, of course, outside in the glory that is the south of France. So what I want to walk you through here, just as I just landed here, because some stuff just happened that is incredibly important. And if you don't understand this, you're going to make some rather silly moves today. First of all, China has cut interest rates. Secondly, what about the Fed? The Fed is deciding today US interest rates. Are they going to follow suit? I'll tell you that. And what this huge shift that we have seen in Fed policy the last 2 days, it isn't announced, but it's in the data. It's a little secret, but nobody really understands what it actually means. Even the people who have noticed it on social media or the occasional loon in mainstream media, they don't understand what it means. I'll explain it to you. So you be the best and probably the best that are out there. Does that sound good? That sounds good. Put a 1 in the chat and I know you're listening. Plus we have more good news and even more good news, but I'm still worried about the market. And I'll explain to you why, just so that it really lands for you and really makes full sense for you, because that's really the goal here. You can hear okay, brilliant, absolutely fantastic. It's a touch bright here, so I'm going to struggle a little bit with seeing the screen, but I'll share my screen with you regardless. At least you can see what I can see, or maybe can't see. I'm going to have to do something about the brightness out here. I'm seeing lots of ones. Brilliant. Love that, guys. Thanks very much. Always a bit of a wobble when you set up your kit somewhere in a different location. You might have seen me here before, by the way, if you've been watching for a little while. We're usually here in the summer. So let me share my screen with you. Pre-market, you can see it's looking all right. Now, as I say, China's cut interest rates. What about the US Fed? What about this huge shift? What does it mean for you? And what does nobody understand? And then we have lots of good news, but I'm still a little cautious here. And I want to make sure you understand the reasons for my caution. I'm not a doomer and gloomer. I'm not a pessimist, quite the opposite. So let me first of all explain what China's just done. So China has just done a bunch of things. Essentially, they're stimulating the economy by making money more available. That's essentially it. So they're essentially cutting interest rates in the slightly funky way that the Chinese do that. And why are they doing that? Well, maybe it's got something to do with that meeting in Switzerland. So the Chinese are meeting the Americans to talk trade for the first time since, 1986 or something. No, not seriously, but since the sort of 2019 stuff. And the market's saying that's good news. Now, if you saw me yesterday on Twitter, or on X rather, I was saying by the announcement, sell the meeting. and I'll explain exactly what that means in just a second, because I think that's very important. But to start with, you just need to understand that they're cutting interest rates. So what about the Fed? Well, the Fed is going to say to you, and I'll explain what's on the screen in just a second, but it's to save you a load of time today. Don't watch the Fed press conference, don't bother with any of it. Jerome Powell is going to say, we're data dependent. He's going to say there is uncertainty because of tariffs. We are uncertain what inflation is going to do, and we will move with data as it moves, when it moves, and that essentially moves. You need lots of unemployment in the US for them to cut rates. We haven't got that. So basically, they're going to do nothing. It's a complete waste of time. The whole thing, don't bother watching it. Don't bother listening to it. Don't bother reading much about it. There'll be very little unchanged. And if that isn't true, then, well, I don't know. I'll eat my hat. Now, what the Fed is doing, though, and this is sneaky, really sneaky business. They bought $14.8 billion worth of bonds yesterday. And you might be thinking, why do I care? Do you know how they print money? They print money by buying US government bonds. That's how they print money. Because they don't need to have the money, they can just buy stuff and create the money. That's how they do it. That's how they've been printing all that money during COVID. And yesterday, so the day before, they bought 20 billion of bonds the day before. So that's almost 35 billion in 2 days. That's a little unusual. Now, before you go all nuts and start buying all the stocks you wanted to buy because the Fed's printing money, all that sort of stuff, and bear with me for just a second, right? So there is no printer, by the way. There's no physical printer. No, they don't. It'd be silly to print all the money. They can just do it digitally. They can just say, we're buying 34 billion of bonds. Where does the money come from? Well, I just created it. I just type it into my spreadsheet. Now it exists. That's literally how it operates. It's bizarre, but that's how it operates. So you're of course going to run out and buy loads of money, loads of stocks now. But here is where that's the report from yesterday. That's where that 14.8 billion comes from. And they put these out every single day. If you want to subscribe to something exciting, subscribe to the Department of Treasury's Treasury News. I know. It doesn't get any better than that. It also cures insomnia. But what it does mean, and I'll try to make this chart as bigly as for you as possible on a laptop screen. Can you see on the chart here a green line, a bright green line? If you can see a green line, write green in the chart, and I know you can see it. What do you see? Okay, so it went up pretty much in a straight line for a really long period of time. And that was just the general amount of, I'm explaining whether they're printing and how they're printing and doing that, okay? George, appreciate the green there. Thanks, you're first. George wins the green prize. That was normal, right? And then here, a little hiccup happened that was called COVID. And then Jerome Powell lost his mind. He was like a gambler. He was just drunk on money. And he thought, I'm going to print money. I'm going to print a little bit. Actually, why don't I print a bit more? This is so fun. Let's keep freaking going. And he printed some extraordinary amount of money. How much did he print? Can I still see that here? So he took us from about 16 to about 22 billion. So he added about $6 trillion to the US money supply. We were at 16, he added 6. So from the very beginning of the US dollar history, when somebody invented the US dollar, up to COVID, they created 16 trillion. Jerome, the magnificent money printer Powell, added 6 trillion on top of that in just a couple of months, right? Complete lunatic, if you ask me. Now, whoops, something just fell across the camera, but we're still good, right? Yeah, we're still good. And then they said they're going to start shredding money. Now, you can't really shred away $6 trillion worth of money because all the rich people would get a lot less rich, and rich people don't like it. They really like it. Us, my dudes around here, they would not enjoy it. So they shredded a little bit, just a teeny tiny bit, sort of a token effort. And what are you seeing now? Well, they're printed, and they're printing a little bit faster of late, right? And that's important. Why is that important? Why should you care about some weird technicality the Fed does? I should have probably told you that at the beginning. Does that make sense, by the way? If that makes some sense to you, put an S in the chat, and I know that it makes some sense to you. But let me show you the chart of all charts, and I'll try to zoom in on this as big as possible. So what have we got on here? We've got in green, money. Seems appropriate, doesn't it? So let me get where's my pen? Can we write here? Yeah, green is money, right? So the dollar. And then in that sort of red purplish color, what have you got? We've got the, thanks for all the S's there, guys. I'm glad that this is landing for you. That's always the intention. We've got the NASDAQ. Now, can you see clearly now? The rain is gone. Can you? I landed here this morning. Everyone's complaining about the weather, and it's like, hallelujah, right? It's sort of glorious. If you can't see it, it is absolutely glorious. Can you see the blue sky? If you can see the blue sky, let me know. It's absolutely freaking glorious. Sea looks glorious as well. But you're not here for that. You're here for learning how to make your money work better for you. So can you see that the NASDAQ and the money moves in line, right? So all of us who thought we were smart investors, we're not really, are we? We're just basically following along. We're just along for the ride, really. And the Fed prints all the money and we all got richer. And then they started shredding money and the market went, no, don't do that. We need the stuff. We need the source. And then they stopped here. And as they stopped, the markets recovered. Come down a little bit, but the more they print, the more this will go up, right? Clear as day. They're about to kiss, indeed. So this is good news, goodly news, right? Glorious news, marvelous news, absolutely fantastic news. And I'm excited because I'm in Europe, which actually I kind of, have you ever felt like that? Actually, I'll tell you in a second. okay, before you guys now run out and buy stocks because you think you understand it all, let me ask you one question. Who here has, or actually, who here does not have a piece of paper on his desk with written rules of when he buys and when he sells? Who doesn't have that? If you don't have that, right, and put an R in the chat for rules, right? And let's be honest about it. There are what? How many of you are online here? It's a little hard to see on my very bright screen here. There are 2,700 or so of you live here. How many of you? I'm going to see a lot of R's here. How many of you don't have written rules on your desk? Just be honest about it. So it's no shame in it, right? We'll shame you afterwards, by the way. Okay, there's lots of R's here. Now let's shame them, shall we? There is Nikolas, there is Dirk, there is... Just kidding. No, I love you guys for admitting that, because that makes you normal. It makes you human. It means you probably have friends. You probably have a social life. You get invited to things and you go to parties and people are happy to talk to you, right? It makes you a normal human being. Now, the problem with that is that the only successful investors I've ever met, and I've met a lot of them, guys who've managed hundreds of millions, billions of dollars for big funds, they've run their own hedge funds, retired, living the life, glorious stuff, and continue to massively outperform the market. What do they all have? I know. You thought I was going to say that, didn't you? They've all got rules. Why do they have rules? Because if you don't have rules, you don't know whether you're doing it right or wrong. If you don't have rules, you just go in with the flow and you're hoping and praying and wishing. You're basically like Jerome Powell, the guy drunk on money. And it means you have good times when the market goes up. And it means you have bad times when the market wobbles. And right now, it's probably an okay time after a bad time, right? It's entirely avoidable. We can make money in all markets. We can protect our money. We never, ever need to have large losses. It is absolutely freaking avoidable. But you need to do one thing. You need to have rules on your desk. If you don't have rules on your desk, you need to get some. Where do you get them? Because my laptop keeps folding forward. Well, I'll give them to you for free. Now, you're thinking, well, whose rules are they? These are the rules that the most successful investors I've ever come across on both Wall Street and Chicago exchanges have used for about 50 years. I did not invent them. Yes, I've put them together and I've simplified them somewhat so they're easier to understand, and I might have updated them a little to fit this current market, which is a lot quicker than it was 50 years ago. But ultimately, there is the same rule for when do we buy, what do we buy, and when do we sell. And once you know those, crikey, life gets a lot better and you can sit here in the south of France and enjoy the glorious sunshine, right? Which is what I'm doing. So who's going to go and get themselves some rules? Well, probably only those of you who actually want to get to retirement early, want to live a nice life, want to be financially free and actually get free. So for those of you, you have 15 minutes. You can go to felixprehn.org/get-free. You can learn them. And anybody who's going to do that, put a G in the chat. And all of you guys who've already seen it, let me ask you this, was it useful? Tell me whether it was useful in the chat, and it'll encourage a few thousand others to do the same and get out of this randomness of I'm up, I'm down, I'm up, I'm down, right? It's funny if you're Homer Simpson, less funny if it's your life savings, right? So felixprehn.org/get-free is where you get that. Link is also down below in the description, my friend, and also read what the guys are writing in the chat here regarding usefulness. That's really the best way to get that across. Now, what the Fed is doing here, okay, loving you guys for writing all that in the chat here, amazing. Let me explain what the Fed's really doing here. And this is what nobody really understands. This is, if you understand this, you're like top of the pile, right? Top 1%. They're not printing money in the traditional sense. So QE is quantitative easing, it's money printing, right? The 35 billion actually comes out of an existing Fed brokerage account. Now, who's the broker of the Fed? The Fed. Who's the banker of the Fed? The Fed. Who's the accountant? The Fed. Who's the auditor? The Fed. It's a great system if you can just generate money. So it's essentially a reinvestment. But it matters still, because what they've been doing is that they've been letting these investments as they expire, because these are bonds that they buy. Bonds expire. They have a finish date, right? They're letting them expire. And that's been reducing the amount of money out there. But for the last 2 days, they've been taking that money and they're reinvesting it. It's like you selling, Tesla and buying AMD with it or whatever. Please don't. I'll talk about that in a moment. But this is important because it provides liquidity, which is hugely positive for the market, especially the stock market. So this is the Fed quietly, without headline grabbing, stepping in and supporting this, the big problem we've been having under the surface that nobody really understands has been liquidity. They're solving that, they're fixing that, and I'm absolutely loving that they're doing it because it'll make us wealthier faster, right? So now you understand what nobody understands, okay? So it's not real money printing, but they're not shredding the money. Instead, they're keeping that money around, and that's very, very, very good news. So we're happy about that. Now, I told you there'd be a few other things that I'm very happy about. And it isn't just the glorious sunshine here. It really is. There is something about this part of the world. It's called the Côte d'Azur, for, coast of blue, because it's so blue, and the sea is blue, the sky is blue, the colors are amazing. There's something about that. If you ever want to, if you've never been around here, do come. Especially, I'd say May and September are really the golden times when it's not overrun with, I was going to say the Huns, but that'd be funny because I'm German. Now, what else is good news? Buybacks. Right? We've just had the biggest buyback ever, and the announcements are bigger than ever. And it's just getting bigger and bigger and bigger. And this is supportive for the market. So buybacks are just big companies buying their own stocks. Like say, Palantir is buying their own stocks. PayPal is buying crazy amounts of their own stock. And, a lot of these companies, Apple, spend what, $100 billion or something on buying their own stock. So this is what we're talking about here, right? So this is supportive. These are buyers. And then this is also supportive. Why? Because too many Brits there. Yeah, so that is a bit of a problem. You shake a stick and there is an Englishman around the corner. Still better than the Germans, though, isn't it? Let's face it, much better than the French. Oh, God, I'm going to get some really good service here around here the next 2 days, aren't I? So I'm showing you what? I'm showing you consumer confidence. Now, when consumers, that's the black squiggly line, is consumer confidence. And when consumer confidence is terrible, like it is right now, it is down here. That's it. So it's pretty bad, right? Sort of historically speaking, we're kind of at like 1980 periods or 2008 global financial crisis type stuff, right? Pompous, red-faced wine guzzler. Yes, exactly. Brits. So why is this good? Is it not bad if the US consumer is really, really depressed and miserable? No, it's actually a good thing. Because when they're really depressed and miserable, they can't get that much more depressed and miserable. First of all, you have a lot of prescription drugs, let's face it. That's one thing that keeps you a little happier. And secondly, you can't go much lower than the present level of depressedness. And that means, is it more likely to go up or down? This is a game we play, right? Is it more likely to go up or is it more likely to go down? I think I've sort of given it away, but put it in the chat. Up or down? What's more likely? Put a U or a D in the chat so I can see that you're paying attention. This actually makes sense for you. George is the quickest. He's like really quick off the mark, that guy. I'm loving it. Up, okay. Matt seems to say up. At least the chart seems to say it, although it's a red line. It's a bit confusing, isn't it? Up, 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 and lots of U's there. Okay, most of you think it's up. Duh, indeed. Up in a way, yes. Okay, so I agree with you. So because the consumer confidence is so miserable, it's very likely to go up. And zoom in a little. And what you can also see, and I'm going to see if I can get myself another pen color here. What you can also see is that every time we've been this depressed, like in November 2008, over the next 12 months, the market went up 22%. In 2011, the next 12 months, the market went up 15%. In 2022, it went up 17.6%, right? You get the idea. May 1980, it's around about the time I was born, actually. It was up 20%, apparently. It must have been the good news that I was around. 1975, up 22%, and so on. You get the idea. So when we're really, really depressed, the market tends to rise afterwards. So be a little bit of a contrarian and absorb that. And feel free to take a screenshot if you wish. I'm going to take this chart away now. So there is that, right? Any other charts? Well, yes. Go and learn the rules, my friends. None of this macro stuff is going to make you money unless you have rules, unless you have automations, right? I've been buying a load of stocks this week and last week, and you guys in my community, you see it all, right? I've been rather active, and we're making quite a lot of money, and it's brilliant. And they're not the stocks that you talk about all that much. They're not your Nvidia, it's not AMD, it's not even Palantir, or that's starting to look a bit more attractive. It's things like gold and defense stocks and boring things, right? That are making us money. So why did I start this off by saying that I am worried? I'm a little bit teeny bit worried. Okay, a couple of things. The VIX, the fear index, is presently at 24.8. It's up just a teeny tiny bit, but it's enough to not make me feel all that wonderful about it. And why? Because we like it below 20. Right? So there is still an elevated level of fear on the market. Now, the Trump meeting with the Chinese, I think it's great. I think people should talk. It's much, much better than not talking. But if you think about where they are at, right? Trump is sort of over here. The Chinese are sort of over there. For them to meet somewhere in the middle seems highly unlikely anytime soon. The US government has said they're hoping to have trade deals in place with 80 or 90% of their key trading partners. We're talking Mexico, Canada, the apparatchiks in Europe, the Indians, the Koreans, the Japanese, allies. By the end of the year. That's the ambitious time frame that they're hoping for, which is probably a little ambitious. Most trade deals take a decade to negotiate and maybe another decade to implement. So I'm not saying it isn't possible to do this with countries that really want to do business with the US, like India, for example, right? They stand a lot to gain. But given the relations at present with the Middle Kingdom, it seems a little unlikely that we're going to do anything this year or maybe even next year. That's the way I look at it, seriously. So yeah, there may be little teeny tiny bits where they really need something, like where China has just exempted airplane parts, which they obviously need, and the US has lowered some things because they really need certain things. But other than that, I still think this standoff, this freeze, is going to last a while, because who's going to blink first? Right. So the market getting excited about that is not positive, because it's going to get unexcited about that when nothing happens. That's my view. Maybe it's a little bit depressing, but that's one view. Right? Now, secondly, we're still looking at gold, for example, up and up and up and up and up, right? Okay, touchdown today, but look at that chart. Why does gold go up like that? Because people are worried about inflation and the world and everything else, so people go into gold. Seems like a safe haven. So when the safe havens go up, the market rarely goes up at the same time. And we're seeing some of our favorites, well, even the Palantirs, struggling to break through the recent highs, right? That one up there. And by the way, I did warn you about that in advance, right? I said, I think the risk is to the downside. And by the way, I'm liking it. I like that it's pulling down, because I think it's going to give us a nice entry opportunity. HIMS is another one that's actually doing very, very well. That could make you feel a little bit bullish on it. But even stocks like, say, AMD, everyone's not like, oh, AMD, finally. I'm sorry, really? You're looking at that and you're going, this is a breakout? Well, that was a breakout too, wasn't it? And this one, and that one, and this one, and that one, and this one. So this is a breakout. What is our criteria? Who has watched our masterclass? I actually can't see 50-day moving average line on the chart screen because it's too dark. My screen, it's too bright here, rather. Oh, there it is. Okay, so we've peaked our head above it. I see. Okay, let me zoom in a little bit. Honestly, it's a little too bright to be doing this outside here. But it's nice to be outside at the same time. Can we zoom in a bit? Yeah. So we got the 50-day moving average line there. But the 150 is somewhere up here. And we want to be above that. That's what I would say. So I still think semiconductors, I'm not touching it. I've been saying it for weeks. What are the semiconductor sector doing? Can you see what it's doing? Do you see the yellow line, my friends? And if you don't know what the yellow line is, go watch the masterclass, because that'll help you tremendously, so you understand what that means. You see that bounce off here, right? That is not bullish. Denise, appreciate you. Thank you very much. And yeah, boy, this is not bullish. This is just not a bullish sector. There are plenty of bullish sectors out there, but this is not one of them. So what I'm begging you to do is get your mind off, I can only make money with tech hardware, because that's been what's making us money for the last 10 years. The market is cyclical. Software, I'm a fan of again. Yes, absolutely. That changed last week. So US software, I'm a big fan of. But semiconductors do not make that list. It's too early. It's just too early. And you might be thinking, yeah, but it's cheap. Yeah. People said that when AMD was $100 higher. People said that when Meta was at $300 and fell to like 80, right? Same story for PayPal and many other stocks. There are millions of stocks that went from $100 to like 90 cents. I'm not saying AMD is going to do that or any of these, but the risk is there. So you want to be in stocks. Well, maybe you don't. Maybe you don't want to make money. Maybe you just think this is some sort of weird way of spending your time. But if you think this is really about getting to retirement early, looking after your family, being calm and collected, and enjoying life so you can be wherever you want to be, provided you have a phone or a laptop with you or something, which is sort of my setup, then you need to make decisions that are based on actual rules that the most successful people in the world use. Because otherwise, how will you ever be tremendously successful at it? You'll have lucky patches. Yeah, everybody does. But if you don't know the rules, you just don't know which direction to run, right, basically. So please, please, please learn the rules, and it'll prevent you, if nothing else, and the link's down here, by the way, felixprehn.org/get free, it'll prevent you from ever having a big loss again. Just think about how much better you'd sleep if you knew that your portfolio would never generate a large loss that you would then nurse for years and try to hide from people around you, right? Does that ring a bell with anybody, perhaps, as the mosquitoes are coming out? All right, let me see. I'm a little tough for me to see your questions because it's a little bright out here. But what about shorting AMD? I would ordinarily say yes, but the problem is that we have so much geopolitical noise and we have so much Trump noise that another Trump tweet will take everything up, irrespective of where it's at right now. So I'm very cautious with shorting, and I would be very cautious with shorting. And really, if that's your mindset, you just have to ask yourself, just got a splinter, someone call an ambulance. Why do you care to make money with AMD? Why not pick another stock that's actually going up? In the long run, the good stocks go up. So it's a little easier to pick the good stocks and watch them go up than to find the half-baked ones and watch them go down, because it's going against the trend. So I would not start with a shorting thing. I think it's a little misguided. At least that's my humble opinion. Basil, you're asking about European stocks. It's exactly the same thing, my friend. You don't need me to analyze individual stocks. Just learn the rules, and then you can apply it to European stocks, Aussie stocks, Japanese stocks, even English stocks, anything really. Even French stocks, it'll still work. I use stop losses, my friend, yes. You mean stop loss limit orders? No, when I want to get out, I want to get out. So I want to get out. For buys, you might want to set a stop buy limit order. Something like that, yes. Because you don't want to overpay. So say you want to buy it when it goes from 9.50 to 10, maybe you want to buy it at 10. But if it shoots to 15, you probably don't want to buy it at 15, right? You want to buy it at 10 or 15. So it can be useful to do it there. How do you get stop orders to work outside standard trading hours? You don't. And it's one of those funny things that people always obsess about. And how often I get that question, and it's a great question. I love it because everybody's always asking it. People obsess so much about the random outlier, the 1 in 1,000 event where the one stock that you have in your portfolio drops massively after hours, which it usually does on earnings, but you could circumvent because you know when the earnings are. And that random 1 in a, 1,000 or 500 event then prevents them from applying all risk management, bloody splinter, to all their stocks because they're worried about the one outlier. So the market is not about, I will make money with every investment or every trade. It doesn't work like that. The market's about making big gains and small losses. And if you allow the small losses to become big losses, you'll have no money left to make gains with. That's what it's actually all about. So it's completely fine to lose money on individual investments. I do it all the time, like every week, a bunch of them. I don't know, something closed yesterday, one or two of them got stopped out. Really don't care. It's completely fine with me because the gains will easily pay for those small losses. But if I let those losses run up from, the couple of percent to 10, 20, 30, 50, 70%, that's what would ruin my performance. So don't worry about the outlier. Still set the stops. And it just means, you close it, you sell a little lower than you wanted to. It's very simple. It doesn't matter. So try not to get emotionally attached to individual stocks. We don't care what we make money with, and we accept that we will lose money on certain investments. It'll always happen. It's just the law of nature. You do not make money with there has never been an investor who made money on every investment. Look at Buffett. Look at one of his last big buy that he keeps buying is Oxy, right? Yeah, Oxy. He's been buying Oxy since about around about here. Show you. So I think around about here, that was sort of his level of buying, and look where it's trading right now. So he's losing money on that, and he's okay with that, right? Because he's made a lot of investments, and some made him a lot of money, and some will lose him some money. Jonathan, you got stopped out of Palantir and HIMS yesterday. Brilliant. And you made money. Amazing, right? Doesn't that feel good? It's not about making the absolute maximum amount on the investment. You will never buy at the bottom and you will never sell at the top. But you can buy near the bottom, just after it, and you can sell just after the top. And if you do that, you'll do better than 99% of people out there. How do you learn that? Well, I'll give it to you for free. It's felixprehn.org/get-free. You're actually going to learn the rules. Who's going to learn the rules? Put a great big R in the chat if you're actually going to learn the rules, because you actually want to get to retirement early. You are sick of gambling, you're sick of being worried about the market, and you actually want to deploy a strategic, systemized thing that takes you like an hour a week. And then you never have to look at your portfolio again because you know what's happening. Right? If that's you, put an hour in the chat. Not sharing the Buffett screen. Okay. You so sorry about that, but you get the idea. This is where Buffett sort of was buying, like around about these levels here he was buying, right? So where we're trading right now, we're trading down there. So he's not having a good run with that one, but he's okay with that. He's up like 5 million% from the original investment. So, he's good with that. Loving the R's there, guys. I'd read them out, but it's a little hard for me to see. So lots of R's. I love the triple R's there, Thomas, or quadruple R's. Brilliant, guys. So what are we seeing in the market? Well, volatility is up a touch. Market's a little worried about that. Gold is still pretty elevated, which I'm enjoying because we've been making gold trades the last couple of weeks, and that's looking good. Palantir is trading up just a teeny tiny bit there, right? Little teeny tiny green candle, so that might be the consolidation we want. HIMS, on the other hand, still is flying very nicely, trading at almost $49 there. Would be nice to take out the high from yesterday. We're slightly below that. And any other stocks you want us to look at? Anything sort of big and green, perhaps? Here's Nvidia. Still not a breakout. Still staying away from the whole semiconductor space. What about Tesla? Well, it's sort of just going sideways, isn't it? It's not really going anywhere. And it'll probably keep doing that until we have more details on the June announcements for Austin. See what there was a question. What's that? Lots and lots of stocks being thrown out here, guys. I love you for that. If you just joined, by the way, very quick recap on what the Fed's done. So the Fed, the last 2 days, bought $35 billion of US government debt, which is how they print money. It's not fresh money, it's recycled money. but it's still good because normally they would let that money disappear. They've been shredding money that way. So we're starting to see the amount of money out there picking up again, and it's sort of hidden quantitative easing, if you will. It's providing liquidity into a market that desperately needs liquidity, and this is very, very positive. But the Fed itself today will announce absolutely bugger all, so it is probably much, much better that you go out and you find yourself a nice blue sky and enjoy the day than that you listen to Jerome Powell drivel on and say precisely what he said at the last meeting, which will be, and I paraphrase, we shall wait till unemployment explodes. At that point, we will cut rates too late, and then we hope for the best. That's basically Fed policy at the moment. So yeah, they're too late. They should have cut rates ages ago, but they haven't and they won't. So nothing will actually happen on that front today. I wouldn't watch out for it. Gotta reset my stops. Yeah, just sit down for half an hour and do it. That's what I do every Monday or every Sunday. I sit down with my spreadsheet and I type them in. And it takes me, I've got it down to less than a minute per trade. So maybe 30 seconds. And yeah, it's important. It's really important. The most important half hour I spend a week, quite frankly. My wife says, "Show me the money." And that's a good one. It's actually, I actually think it's good to have a wife who says, "Show me the money." It motivates, doesn't it? Doesn't it motivate? I think it motivates. Otherwise, you get a little bit, a little bit. I was going to say unambitious, really. Why don't you use trading stops? Because they're random. I use them for options, by the way, because it's very hard to set meaningful stops for options. But for stocks, it is much better to set them. Okay, look at the Tesla chart here, right? Can you see a natural support on this chart where you might want to set a stop? And this is obviously a little bit advanced, so I'm not expecting you to give me the perfect answer. But okay, we have a bunch of lows here, right? That would be on stop. We have moving average line here. That could be a stop. Or we have all these lows down here, which would also be a natural stop, right? So you have like 1, 2, 3 choices. So why would you just randomly pick one? You see what I'm trying to say? Why don't we go slightly below where the actual market supports? That's usually what we look at. My wife makes more than I do. She's the best. Well, good for you. Maybe you could make more than she could, and then you would be the best. Thought. Do you borrow against holdings? No, not too personal at all. No, I don't. But then I don't. Okay, people borrow against holdings of stocks in the US because of taxes, right? That's really the only reasonable way to do that, because debt doesn't get taxed. I choose to live in countries where that isn't an issue. So no, I don't. I don't have any debt. I don't have any margin. Hate the stuff. Don't like any of it. I don't like mortgages. Don't like any of it, except for investment properties. That's a different story. That's like a business. But no, personally, I loathe debt. I just don't like it. I just like the feeling of having no obligation, nobody to answer to, no bank to talk to, no lenders, nothing. I pay my credit card off in full every week. Yeah, every week. So no, I don't have any debt. And I'm very happy that way. So you do see people in the US doing it, different situation. I get that. If like an Elon, right? He will borrow 30 billion or 50 billion or something against his Tesla stock, and that means that isn't income, it's debt. He pays a little bit of percent income on it, interest on it, but it's much better than paying income tax. So yeah, it's just not what I'm really going for. Could you look at Disney? Yeah, big moves to Disney. Disney is apparently identifying as a potentially profitable stock. So bigly breakout here. That is actually looking quite pretty. Yeah, it's very pretty, very pretty. So, well, it's going to face a bunch of resistance from the left loons here. And it's going to face a lot of resistance up here from the woke crowd. That's obviously a joke, but yeah, in all seriousness, those are the two levels I would look at. It's a little hard for me to read screens out here. I'm going to have to do this tomorrow inside, I think. Wife says, I can take your class if I make more with your trades. That's a good idea, isn't it? Although you couldn't see the chart there again, could you? I'm sorry about that. Well, maybe Disney doesn't want to, reveal itself. What I was basically saying here is that you have some resistance in this area here, and then also that whole zone up here is going to be resistance. I actually love couples who do the money management together. I mean, sometimes one is better placed for it, time-wise or something, and sort of handles it, but at least discuss it. I discuss it on a weekly basis. That's what I would recommend, because you guys make a lot more money. How do I know that? Well, I've taught about, I don't know, 10,000 people or something, and quite a few of them have been couples, and they do it very well. And the thing I love the most, honestly, if you bring your children along for the ride, because if you learn this as a teenager, you're going to have a freaking good life, which is what this is all about, isn't it? Where would you buy silver? I actually set some stops up on some silver stocks. Still bleeding profusely here. And I'm new. I'm enjoying the course. I had a question regarding the BA play. Well, you didn't put the question in, did you? Now I know you have a question. I don't know what your question is. We could have answered your question by now. But BA, yeah, just look at it. Isn't it beautiful? Isn't it one of those beautiful charts? Look at the high here and this one and that one and this one, right? And what do we want to do? We just wanted the stock to pop above it. Has it? No. Will it? Maybe. And if it does, I buy it. If it doesn't, I won't. Right? And I won't think about it again, because it's just an order that's conditional on hitting a certain price level, which is really what this is all about. But in all honesty, learn the rules. And Edward is asking, do the rules also apply to SPY? It depends, my friend. And the rules are down here, by the way. felixprehn.org/get-free as I'm blowing away. Look, the only thing that goes up in the long run is the index. So if you just buy the S&P 500 through some ETF, you could just buy it every week and every month and never worry about a thing. You will make an average return, which is somewhere between 8 to 12%. And that's good. Better than what most people do. The question I would then have is that enough for you? Is average enough for you? And my answer to that would be, for me personally, no way. I don't want to have an average life. I don't want anything average in my life. So I do still own some index funds, because it makes my family more calm. Because they know there is something there that'll always compound, us to wealth and so on, and that they actually understand. And then I take the rest of my money and I manage that a bit more actively, and I tend to massively outperform the index. So it's really a personal question. It's the question like ambition and what you want in life and where you are in life. And do you want to retire early? Are you comfortable? Are you happy? Are you just chilled? You're sitting in a hut somewhere and that's all you ever need. There's no right or wrong. It just depends on you, really. That's the way I would look at that. Okay, then let's see. Actually, here's what I'm going to do. I'm going to take off the screen and look at it a bit more closely. This is actually very cool. If you guys ever travel and you want a laptop screen, you can get these. They're very cool. They sort of slide in, and then you have an extra thing that you can clip onto another laptop. Suddenly you got a 2-screen laptop, which is very cool. So let me see some of your questions here. Thanks, John. Appreciate that. Enjoy your holiday. Thanks very much. The funny thing is, when I left Hong Kong yesterday, I was kind of thinking, I kind of don't want to go. I like where I am. I like what I do. I like the weather. I like the climate. I like my routine. I like all of it. And I thought, that's actually brilliant, isn't it? I'm not really looking forward to the holiday. I'm perfectly happy that I'm here, but I'm also perfectly happy where I normally am. And I actually thought that, I never really realized that. This just must mean I think I'm doing something right. So I think actually the goal should just be to be just bloody happy every single day. And I think I'm kind of gotten there, which is a really lovely feeling. But yeah, it's sort of tradition for us to be here in France for a bit, normally in early summer, and then linger around a bit. And how long will I be here for? Not sure. One-way ticket. And I'll see when I run out of patience with the waiters. So are you there for the absinthe? No, I don't drink, my friend. I like the Cotswolds. Cotswolds is also very nice in the summer, absolutely. Do you worry about wash sales? No, not really. Not really. I mean, I think I don't really care what I make. There's so many stocks out there. There are probably 30 opportunities a week that I see. So I don't really care which one I own and which one so I'm not buying and selling the same thing every time. It's just not necessary. Ted, you were the 666 like, creepy, isn't it? Anybody who hasn't smashed the like button yet, this is probably one of your last chances. Enjoy the French cuisine. I shall certainly do that. Hong Kong is hot and humid. It's lovely, really nice. Asia is better than Europe. I'm like you, left Europe or Singapore. Yeah, it's also lovely. Yeah, I think it's I like being in Europe for bits. It does have stuff that's nice, the food and the temperature, the vibe and the feeling and the blue sky and all that. It's a nice that kind of old feeling of it is very nice for a little while. I tried living here for a bit, did about a year and a half in Monaco, sort of the tail end of COVID, and I just couldn't handle it. I just couldn't handle it. It's nice, but it's just not for me. I need something a bit bigger, and I also can't handle the winters here. I really, really can't. This is why I'm only here in the summer. All right, then, my friends. So, how to make trade vision not so dark? There's actually a white version coming out very shortly. I just saw they were testing it yesterday. They're just ironing out some kinks. And if anybody's using trade vision, my apologies for the slowness of the software in the last couple of days. We did not expect quite as many of you to sign up quite as quickly. The team are working literally 24/7 to migrate to Google Cloud, which will take care of all of that. And that's it's very close to being completed, but it's a fairly significant job. So I appreciate you guys' patience on that. And it happens mostly when the market opens and everybody logs in at the same time. So I love that you guys are all using it. That's amazing. But yeah, you'll see a little bit of a slowness there, but that'll be fixed. We're really, 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 really on that. Like the guys couldn't work any harder to do that. So appreciate your patience on that. The brand of the screen thing for your laptop. There we go. Can you see that? UX Max DS. Mobile Pixels is the brand. You can get one or two. I think if you have two, it gets very heavy, but one seems to work very, very nicely for me. And you could also just put them somewhere separately or something. There are a few other brands that do them too, I've seen. But so far, so good. I've had this one now for about a month, and I like it a lot because I find it difficult to do what I do on one screen, because I like to have one screen with my spreadsheet with all the things I want to buy, and then another screen with my broker to set up the trades. Now, in reality, I only need that for about half an hour or an hour a week, but still, it makes that task much easier. And obviously, live streaming from a laptop is kind of hard if I can't see your questions. So I have your questions on here, and then I've got still my chart open on the main screen. So it works really well. So I'm going to follow the rules to see where it takes me. Brilliant, my friend. And which platform do you use for trading? Is that a secret? No, I use mostly Thinkorswim, which is Schwab. Is the Android app out there yet? Yes, it is. It is. And I think to an extent, us launching the apps is kind of what's caused the slight slowdown of the whole experience there, because so many of you guys signed up, which of course I love. So on that note, I wish you a beautiful day. Ignore the Fed today. They're gonna say very little, and heed my warning here. Trump is very, very brilliant at maneuvering and manipulating the media. So when he says, I have an announcement that I will make a big announcement on Thursday, Friday, or maybe Monday, it's going to be the most beautiful announcement in the world. It may be about trade, but actually probably won't be. He's just messing with you, right? So he's going to keep doing that. And until we get to some level of clarity around tax cuts, and that is not expected until July now, which is earlier than I thought. I was thinking September, but they're aiming for July now. And trade deals are not expected really on a meaningful level till the end of the year. We're going to have some ups and downs here. Can we make money in this period? Absolutely. But we're being cautious. We're doing smaller setups. We are not just running out and blindly buying AMD or something like that. So please don't do that, and instead learn the rules, because the rules protect you. And that's the most important thing. Protect your wealth. It's your retirement. It's your freedom. It's your family's future. don't gamble it on whatever the latest thing is because somebody made a YouTube video on it. So learn the rules that all the most successful investors in the world use. Where? How? felixprehn.org/get free. It's the first link down below in the description. And I wish you a beautiful day. All the best.